no private banks were allowed. And then in 94, as part of liberalization, the first set of private banks came, ICICI, HDFC. Later on, people like Kotak and Yes Bank got a license. So they've been really at the forefront of banking, and he's also leading the digital strategy at Yes Bank. So I think, you can think of him as representing the banking sector, and we'll see how they view all this dire predictions that I've done. And then my other friend here is Adhil Shetty. Adhil runs Bank Bazaar, which is probably the largest aggregator of banking products. Recently, Amazon took a huge stake in them at a great valuation. A future unicorn, maybe next month or something will be a unicorn, I don't know. And they're aggregating credit, and they're using data that I talked about, this data poor to data rich thing. They're using that, and therefore, in some sense, he represents the voice of what's coming. And very soon, Vijay will join, and Vijay is, as you know, the co-founder of Paytm, which has 100 million wallets. So if it comes late, then probably have a separate session with him, and he'll give you his vision of what's happening. Though he hasn't heard what I've done, but he'll probably have his own views. So, Ritesh, do you agree with this analysis that we are at this WhatsApp moment in banking, and what do you think? Or you think it's all just bullshit from some tech guy?
No, absolutely. I mean, generally I end up, answering a lot of investors or the press whenever we have a session with them. So these are definitely exciting times. And exciting times, there are two ways to look at it. I mean, people who are rigid and not ready for change will face the consequences. As you said, the future took the better of them. But people who are very responsive and who can actually move quickly with the time, and especially with a lot of emphasis from the government side, where you have the Aadhaar as a platform which is ready, the APIs that you talked of, which banks can ride on, lot of focus on building the interoperability piece, which is there. See, we don't see any of the new entrants, I mean, be it the payments bank or the various wallet players who are there in the market as threats. I mean, the numbers are there. It were reflecting in your presentation. I mean, in spite of so many people entering into the organized financial space, we are talking about only about 5% of the market being, digitized as far as payments is concerned. So there is a 95% opportunity which still remains, right? And the more the players enter, I think that percentage will only end up improving. So we look at it more that this is an opportunity to build synergies. We look at it more as an opportunity to build partnerships. A payments bank, I mean, which is the current flavor which is going on, but we also have a limitation from an operations perspective. So while they can cater to the liability business, they still can't do the assets kind of a piece, in which case they can always build a handshake with the, the banking partners. So we see these as exciting times.
No threat, no problem.
Absolutely no threat. I think that this will work more in a partnership model, and a lot of synergies to be built in.
All right. Okay, we'll come back to that. He says no problem and all that. So, Adhil, you run this very exciting Bank Bazaar and you raise money. Can you, from your perspective, tell us what's happening and what's your take on all this?
Sure, Nandan. So we have an exciting ringside view where we see several million customers come monthly, and we see about 30 banks on one side and several million customers on the other side buying and selling financial products. That's essentially what we view. And I think there are two interesting trends that we are seeing play out in the market, which is related to what you were saying earlier. One is on the customer side, right? We are seeing a rapid adoption of these new ways of consumption. And on the bank side, right, we're also seeing rapid digitization of what was otherwise an offline process. And I'll briefly just cover these two trends. On the customer side, right, today it's almost normal that, let's say I'm thinking about doing a financial product. So I might be 20 years old looking for a car loan, 30 years old looking for a home, 40 years old looking for an investment or a saving. It's actually natural today, right, for me to open up my phone, input a few things, and actually look at what 30 banks are offering me, and then take a choice. So it's not unnatural for me to not go to my bank branch or talk to my father's bank manager or my, or my friend. I actually pull out my phone and start. So that trend is started to kick in. If we look at the number of people visiting aggregator sites like mine or net banking sites, right? We're literally talking about tens of millions of Indians who are comfortable with financial transactions on the phone. We ran a simple survey, right? A year ago, we found out that in a group of 100 net-savvy people thinking about any financial product, 45% of them said they've researched on their phone or the net before they decided to purchase. 1 year later, that same number is 75%. So we're rapidly educating people, right, that this information is easily consumable online and it takes 5 minutes rather than take 5 days going from pillar to post. The second interesting trend, right, so we just spoke about rapid adoption by consumers, which we're seeing. The second interesting trend is digitization of bank supply chain channels. And banks are really leading the way on that front. So if you think about any financial product, right, it's interesting because unlike an iPad, the product changes according to who you are. How much can I give you? At what interest rate can I give you? At what processing fee I can give you? So banks are trying to do 3 things. They're trying to price your credit risk, your product eligibility parameters based on who you are. They're trying to verify the information you claim to have, right? So you say you work at Infosys, you say you make $1 lakh a month, but is it really true, right? And third, they're trying to cover themselves to conform with eKYC compliance norms, saying if this goes to court, do I have your wet signature? These are what banks are doing. Now, interestingly, the infrastructure you spoke about of the 5 platforms takes care of these 3 challenges, right? Today, every single underwriting principle is digitally available in the system, right? So no matter who you are, where you work, what you do, which city or town or village you live in, we can price you based on digitized algorithms. Secondly, whatever you tell us about yourself, we can verify. We can verify your tax details if you give us permission. We can verify your net banking details if you give us permission. We can verify your PAN details. So the second issue of verification, right, of where you live, where you work, that's also becoming electronic. And lastly, right, in terms of the wet signature, and this is where things essentially break down, I think e-Aadhaar is solving that problem once and for all. E-sign is solving it once and for all, which is that I can use the signature in a court of law if something comes up. So I think we are seeing tremendous disruption.
Great. So, coming back to your point, I think one of the things you notice in the last 10 years is the pace and scale of change, right? Yeah. So I showed examples of WhatsApp and how even IMPS has suddenly become much bigger than anything else. And even Paytm in the wallet space has become big. And we have billions of dollars coming into this space, right? Because you have SoftBank saying we'll put in $1 billion, and Alibaba says $1 billion, and Yuri Milner says $1 billion, whatever. And all these guys have made lots of money in China, so they can afford to blow up a few $1 billion in India. No problem. So, given the fact that regulator has now allowed new guys, and there are 11 of them, given the fact that there are people out there with deep pockets who can stare you down by spending billions of dollars, given the fact that technology now makes every physical thing irrelevant, and given the fact that it's a winner takes all, why are you so confident?
So, see, point being that banking is one of the most, respected industries. I mean, the reason being we actually handle the finances of people, right? So, payments bank have been blessed by the regulator. Having said that, the jurisdiction in which they can operate is still restricted. So it's only liability right? Banking is more than that. There's the lending, there's a treasury service, there are so many other aspects which a full-fledged bank can do. And that's why I'm saying, I mean, in spite of there being more than almost 300 banking entities, I mean, if you put private MNCs, cooperative banks, all of them put together, these entities, if all of them put together, have still a lot to catch up on. I think adding 11 more entities into the fray will just help increase that percentage, right? But there is still so much to be creamed in the market. And synergies, when I'm talking of, or partnerships or alliances that we'll end up building with them, is more to, handhold them on the other areas which they can't, today be in a position to offer to their customers. And hence I feel that they can't be a direct threat to a bank, unless they come up with, again, something disruptive on the savings interest rates or, things like that, because then what happens is your cost of funds, etc. get affected. So they have a limited scope. Again, I mean, 75% of their deposits has to be in government bonds, all of that. So that's why from a full-fledged bank perspective, we feel that the more the people who enter into this, the banking business, that will help get a lot of people into the mainstream, right? But there is still something that the full-fledged banks can do, which the payments bank are
Yeah,
not.
no, I'd like to challenge you on a couple of points here. First of all, even if the payment bank can't lend, they can have a back-to-back tie-up with many banks from where the borrowing can happen. Like Bank Bazaar does, right? I mean, Bank Bazaar is an aggregator, and you want to get a car loan. Bank Bazaar says you can choose from any one of these 25 banks. So similarly, a payment bank can offer a marketplace of loans from any bank at the back. So not being a lender is not a problem because I can use technology now. Maybe one of them will buy Bank Bazaar for $1 billion, whatever. So the thing is that the fact that they can't do lending, I can easily solve the problem by creating a marketplace, right?
Absolutely.
Point number one.
Absolutely.
Point number two is that you remember your players are coming in who don't feel that they need to make profit for a long time. You guys, profits, earnings per share. Some bank analyst in Wall Street, Dalal Street wants to know.
Check.
Make losses and nobody seems they get more valuation. So if in that model, this is a disruption in the way you justify what if somebody spends a few $100 million in acquiring customers. How will you fight that?
See,
I'm not trying to put you on the mat.
No,
I'm just trying to understand.
See, unfortunately, it's not an apple-to-apple comparison, right? If we were funded by an entity like a SoftBank, then we would also have luxury of spending. We are a highly regulated body, okay? And you know what are the price points at which we can operate, what are the incentives that we can offer, and those are also dictated by RBI to that extent. Yes, we agree. But what happens is the customers who end up having a relationship with us are not purely transaction driven. It's a larger relation that happens. Tomorrow, if I stop giving them freebies, I mean, if the entities who are today exciting them by providing some discounts or freebies, if they stop that relationship also ends up, it ends over there.
You're saying that people will go to the best deal and all that.
Absolutely.
Okay.
I mean, these are purely
Maybe,
commercial
Adhil, I want to ask you.
relations.
We talked about the fact that India is going from data poor to data rich. Is that happening at a phenomenal pace? I mean, because your business is ultimately you need data from different sources with an API so that you can build it in, right? Is that changing dramatically?
Yeah, I think that's happening at a phenomenal pace. So I think when we looked at the Bank Bazaar business model itself, what we found is India is extremely data rich, right? So we have almost all of our lives electronic, whether it is our net banking statements, wherein there are over 30 million of them, whether it is the PAN database, whether it is the Aadhaar database, whether it's our pay slips, whether it's our tax forms, everything is electronic. I think the important thing is to be able to pull all this together, right, instantly and deliver it without paper. So I think that when we think about democratization of finance using data, essentially what we're thinking about is how can we deliver this product without having to build a branch, without having to put a kiosk, without having to put 5 people there. Because if your smartphone is able to deliver that service to you, essentially that's disruption, right? We don't need a branch in every village. All we need is a smartphone, and on that smartphone we should be able to deliver any financial product. Data will drive that, but for that we also need to figure out how to break out of paper, which essentially all this data allows us to.
But we talked about the fact that with all these new tools, you can go paperless.
Sure. Yeah, absolutely. So I think with the new tools which are now available, whether it's identity, whether it is your signature, whether it is your income, whether it is your debt, every single data point is now available online. Like you said, now you add to that social media data, you add to that consumption patterns that you're otherwise displaying on the internet. We're turning into an extremely data-rich environment wherein a lot of people who traditionally are also unbanked potentially will have access to these services.
So, to get back to Ritesh, do you feel that the current banks are regulatorily hampered and all the new guys can do whatever they want? I mean,
So when it comes to new guys, I mean, again, people who will enter the payments bank will again come under the RBI regulations. They will have to comply with, whatever are the RBI regulations. We cannot technically compete with an e-commerce entity or the pure wallet players which are there because they have, a different leeway that you have. But as I said, I mean, banking is not only transaction related. It's more relationship driven. There's much more to it than only doing a pure peer-to-peer transfer or just doing a mobile recharge to it, right? So there are wealth management, there is insurance, there is advisory, there are a whole lot of functions over which banks have built a reputation over the number of years. So some of these, what you call new kids on the block, as we call them, who are trying to disrupt. The good thing is they are helping us educate the market, right? So otherwise the entire burden of teaching new technology, coming up with new solutions and educating the market used to fall on the
foreign money is helping us educate the market, so you can take it later.
Good.
Sure, maybe. All right. So, so finally, so you're saying that it's not a threat, and that you'll be able to deal with it.
So, I mean, again, threat is not the right word. I think it's a good environment where there is play for everyone, and I think in the long run, it's the society that will benefit. I mean, because 95% is a huge number to be covered. So,
Adhil, what is, when something goes from paper to electronic, and the friction goes away, what is the sudden change that happens?
So I think in other markets around the world, right, what we've seen is that when something goes from paper to completely instant, the response rates are very exciting. So we're not talking about a 20-30% growth. There have been discrete cases, right, where in the past, let's say this happened in a foreign market, wherein to consume the financial product, they'll mail you a form, you fill in the form, you send the form back, they'll verify it, then they'll send you the product. Process takes 1 week, right? The new process is you're there, they verify everything electronically, the product is added to your cart instantly. Response rates, right, are like 8-9x. So I think the ability to disrupt if we do this, right, is we don't need a supply chain. And people often ask us, right, saying, hey, what about the risk in doing this, right? What about the risk in electronification? What if we do away with paper? Interestingly, both qualitatively and quantitatively, right, we're finding that when you actually use electronic, right, the paper can't be forged. The bank statement cannot be changed. You cannot give a fake card, right? So electronification actually cuts fraud. So when we actually look at real data on non-performance in most of the portfolios we work with, we find that they have a NPA ratio of less than 25%, 25% less than what the market standard is. So what we're saying is that this is not a threat, this is a weakness. And I think with more people coming in, right, and from our side, right, at Bank Bazaar, we find Indian banks very, very aggressive. But with more people coming in, right, I just think this pace is going to pick up even faster.
Hey, Vijay. Well, I want to introduce you to the man of the moment, Mr. Vijay Shekhar Sharma, who is, as you know, he's one of the 11 guys who's got a payment bank license. He's only one of 2 people who got in his personal name. That I don't know how you get a bank license in a personal name, but obviously this guy is very special if he can get a license in a personal name.
I'm going to tell you what the secret of that is.
Huh?
I'll tell you the secret.
Okay. Tell everybody the secret or me?
Oh, it's for everybody then.
Then it's okay. Vijay is also the founder of Paytm, and I showed you the figures of Paytm, where Paytm already transaction volumes are more than any bank in terms of payment transactions. He says he's just recently announced that he's got 100 million wallets, and he's the disruptor that we talked about. So Vijay, you were not here. Actually, I made a presentation just for you, but you didn't come here.
I saw the tweets.
You saw the tweets. Okay.
Thank you for that.
So I've made this argument that in 2009, when WhatsApp came, nobody knew what was going on, and the traditional telcos didn't get it, the traditional internet companies didn't get it, and some 40 guys led by a Ukrainian migrant who had brought up on food stamps created this great company which got sold, and now they're bigger than SMS.
Correct.
So is India at a WhatsApp moment in finance?
Wow, awesome. And I truly believe it is that, because what I've learned is that people have underestimated the tsunami power of what smartphones have brought. Whether it is messaging, whether it is taxi services, is another incredible, crazy statement that I can make. Because in such a regulated, sort of underworld controlled or mafia controlled sector that you can assume, if Uber and Ola can exist, I swear on God, financial services will go mobile, no doubt about it. I mean, there is no even alternate about it. And sir, what you said is what I wanted to tell you guys. I think mobile is a new way. This is not internet of desktop. In fact, the best part is the desktop company seem to be losers on the mobile when it happens. Like Yahoo used to be the internet king at a point of time. and some of us belong to that age of internet. And when it happens to be mobile, they're not even there. And I firmly believe that everything that happened on internet has to be resetted. And just because you have an internet legacy, you are at a disadvantage. Your process, your checkout flow, your build-up of back-end process, it has to be resetted. You just have to build bottom-up stack from the front-end and back-end all the mobile. The problem is people try to have a mobile strategy once they have an internet company. No, this is not about strategy, this is about the game. Your game has to be mobile, not your strategy has to have mobile. I think that is what the difference is. And when it comes to financial services, another total visual pattern, all of us are very visual pattern watcher in the world, is that whenever technology companies, and lately led by mobile and across the sectors, have entered in a sector, whenever they have got in, the incumbents of that industry take tremendously large amount of time to understand what technology can do and what will it really mean to that industry, versus the technology guy understanding what that industry nuances are. Now, as I say again, Uber or Ola know a lot about taxis, then taxi companies really know about what technology is. And that gap is all about smartness, intelligence, technology capability, disruptions, and it is truly led by none other than consumer. Actually, consumer is accepting mobile faster than even the shopkeeper or a banker or a service provider is understanding that they want to. And because some of us will take that bet, and I saw that tweet, that future will not be the plastic. You know, in India, we skipped the landline generation and we landed mobile, right? I truly believe that in India, we'll skip the plastic generation, we'll be the mobile. I mean, this is no doubt about it. The POS which didn't exist in this country, the card that existed but was useful only for taking cash out of the bank ATM, is the reason that the mobile will be that. And it was so humbling when I saw a tweet that a filling station in Bangalore, it's called Vikhyat filling station, it is somewhere, I saw the tweet, that is how I know it, actually has put up that we don't take cash, we don't take card, we take Paytm, mobile money using Paytm. They actually have that, and I got that tweet from one of the person who lives in Bangalore. I was totally surprised at how a petrol pump dealer who wants to drive this agenda is doing it. And then internally, we're working with HPCL to drive some of the pilots. So I quickly told my team that, look, these people are trying to do some things, and you didn't even talk about it to me that it has started. Then quickly the senior rank conversation landed, and then we found out, no, the pilot has not started. HPCL had invited some of the filling stations that we will use mobile money and Paytm will be the way, and then surprise, this guy goes on and does it automatically. Did you hear automatically? How can this happen? I mean, have you ever heard a payment company acquiring a merchant automatically? You know that 3,500 rupee POS setup machine, rental, agreement, TDR? That's the magic. Because now you have a mobile phone on the B party and the A party, the money transfer is zero cost, no cost, and it is as instant as you get an app and you're on. And that gentleman didn't have to sign up with us as a merchant. And this is exactly what will bring the revolution, and this is the reason that it is called WhatsApp movement, because you downloaded WhatsApp and you are on the messaging platform. You downloaded Paytm app and you are on a payment acceptance journey. And surprise, in this, there is no mathematics of TDR, 2.35%, 1.5% or anything. Because it's a P2P transfer, it is zero cost. In my system, it is a database entry from one database row to another, that this money from this wallet is landed in this wallet. It's so straightforward and simple. And you know what? This doesn't require fancy kind of phones or even touch or anything else. It's very simple. I mean, it has a lowest common denominator called text and voice, and then it has a highest common availability called I will have thumb and I will scan and touch. I mean, it doesn't matter.
Quickly, you reach 100 million wallets, right?
Yes, sir.
What's your target?
500 million Indians by 2020 will be on the Paytm platform. That's our wow, that's our game, and I mean it so sincerely. This country, sir, I mean, we are sitting in Bangalore. I was here in NPC first, NESCOM Product Council, and I was all the stays. This country hasn't produced products which quoted when 100 million users are quoted. Typically, an American company or a Chinese company would be quoted that they have 100 million users. Now, at least there is one entry, and next will be 100 million monthly active entry. And that's what the aim is.
Vijay, one last question because we need to throw it open. You know, these guys who back you, your buddy Jack Ma and all that.
Yeah.
So they write any number of billion-dollar checks, is it?
Well, I see a myth here.
Of course.
Well, I want to tell you this. There was an elusive India middle class for economy, and then there was an elusive 100 million user base of internet business. Right? Both has happened. Now, thanks to this era, I started my entrepreneur journey in 1999. I wrote a search engine in 98 and content management system and sold that company. And I remember there was a Gartner report which said 10 million users will come by 2007 or 8, whatever that was. It never happened basically. End of 2000 never saw 10 million users and all dream got shattered. But today there are 100 million real users. All of the Paytm customers actually has done a I accept and created a password on a mobile internet page. I mean, that's like a minimum sign-up requirement that we have. So you have to have a phone, number, verified, link, and so on. So this exists. So when you talk about Jack now or Bezos there, basically the world needs growth markets, and this is one of those. Whether you will have elephant rate of growth, the rabbit rate of growth, or the trunk rate of growth, keep running there. He promised.
Now we'll just, I think we need to...
Money is never a problem for people who are on a mission, and who better than you will say that?
Okay. So I think because we are running out of time, this is fascinating, but we'd like to throw open for questions from the audience. I'll ask a couple of questions. My old friend Sridhar is raising his hand, so...
Yes. License in the name?
Ah.
Oh, it basically, RBI wanted Indian entity to be the promoter and majority shareholder. And my company, because it has international investors, has majority of international ownership, couldn't become the promoter of the payment bank. So I, by virtue of being Indian and owner of that entity there, will get the license as a promoter. So I'm the 51% owner and promoter of the payment bank. That is why they put the name.
Okay. Yeah. Well, we can all apply for licenses.
Hi.
Narayan. Narayan is the chairman of RBL and astute investor and trend spotter.
Yes, sir.
Narayan, what's your question?
Am I allowed to make a comment or later?
A comment.
Yeah.
You
Yeah.
can give comment.
No, actually, I'm trying to represent the dinosaurs just before the meteor shower. So if you'd give me 30 seconds.
Okay.
I actually completely disagree with Ritesh. I think only the paranoid survive, and as a bank, we are absolutely paranoid that young people, Adhil and others, with his hairstyle and his tie, and are coming to take us over, and we are totally trying to get ready for this. RBL will be the first bank to have both a public and private API launched next month. And we already have several startups on that, fintech startups on that ecosystem. And we have to slug it out. The things that bank knows how to do best, one is try to keep the customer that it already has and try to make inroads into customers that doesn't have, while Paytm is taking care of the other 400 million. That means there are 500 million left. So we can try for some of those. And the second is that the credit scoring part of this must and should be led by banks. While the technology guys can potentially get many people to give you credit, and they have the access to data elements of credit, how the algorithm is written could potentially still be led by.
Why?
No, why? Actually, this is exactly where I differ, and I want to share this fact.
No, hang on.
Totally illogical.
No, I know, I can shout as loud as you can. No, just 1 second. You just in the same way that you say that non-technology firms can't do technology, I can tell you that technology firms can't do credit.
Yeah.
Right? And the jury is out, and maybe we'll both slug it out and one will win. But it is possible for both to slug it out.
Okay, 21st August 2015.
Okay, but Adhil, tell me, the algorithms that you have are your algorithms, right?
No. The algorithms which are run, right, are proprietary to the bank. And the bank is the primary custodian of that decision. Because all said and done, right, the money at risk is the underwriters. What we facilitate, right, is we provide a ready-made platform where it's plug and play, everything is configurable, and all these data elements get pulled into it to take an intelligent decision. But like rightly pointed out, the way we're viewing it, right, is the custodian is the bank in the current environment.
No, I know, but
So
is anything preventing somebody with a lot of data to build the algorithm.
Yeah, that's what I was going to say.
No,
next.
in the future, it's entirely possible that anybody, including
Yeah.
the technology provider, can write the algorithm. It is just that it behooves the bank with its long history to get there ahead of that.
Yeah,
That's all.
so no, finally.
So therefore, it's a potential
Okay.
slugfest.
Fine. Anyway, I think, Vijay, we'll have to stop.
Just one
Last
liner
point.
there. On this credit history, the very fact that Indian banking ecosystem has banked itself upon all the deposits and the way the credit algorithm has written is the reason that Mr. Kingfisher gets 6,000 crore and I didn't get 6 lakh rupees.
Well, that's a parting shot from Vijay. Now I think, I'm sorry, but we're running out of time. We're going to bring this to an end. I think this was fascinating and I think a lot. Okay, do you all agree there's a WhatsApp moment in finance? Yes. Okay, how many of you think the incumbents will win?
Maybe. I'm going to be maybe.
How many of you think the challengers will win?
This is the room of my challenger. That's why I want to shift to Bangalore, by the way, guys. I mean it. I mean it. I live in the
at least-
city where the incumbents lobby.
There may be some self-selection here because all the guys here in the room are challengers anyway. So anyway, so we'll have to come to an end. I'd like to thank my colleagues Pramod, Sanjay, who helped actually make that presentation happen, and Vivek for the demo. And all these guys are really the people behind the scenes for building all the technology that the world can use. Thank you very much. Have a nice day.
Thank you.